Hey boys and girls, Siam here. So I've written out an equation here and I'm going to tell you what I think it means and how I'm preparing myself for tomorrow. Okie dokie, I'm going to make this quick. I could literally talk for hours about this, but we have a bit of a spicy concoction going on here, and I'm not going to go in depth over each one. If you want to figure out what I'm saying, if you go to YouTube and type Siam Kid macrometrics and watch this first video here, macrometrics 1, I go through a whole bunch of stuff talking about what are the actual leading indicators of an economy, not the consequences of an economy. So have a little look at that. So that's the first thing. So the first thing is crashing MV. So the reason we have sky high M2, and as in the amount of money or currency that's being printed, is because of MV. So velocity of money, and it's been crashing ever since the tech bubble popped. And no matter how much stim pumping we do, it still is not recovering. And the only way that can happen is for central banks to roll out a CBDC, central bank digital currency, and do helicopter money and give us a form of UBI, universal basic income, which is sort of zoned off. So it'll be time stamped, so you have to use it within a month. That means you can't save it, and you can only spend it at certain suppliers like Amazon or whatever. That's the only way that they can really get this MV going up. So that's MV. QT, quantitative tightening, so rate hikes and a few other things. These are sort of the same thing. So if you look at the overnight reverse repos, look what's been going on since basically end of April. This is QE, this is QT, so quantitative tightening. So this is the Fed basically chopping up all of the extra lines of credit and the credit cards that they've given out to the big banks, etc. And is there any surprise that stocks have basically fallen over themselves since then? So if we look at what happened to the S&P, or I don't know, whatever comes up here, the Dow Jones from end of April, oh, would you look at that, 21st of April, market started shitting themselves. Quelle surprise. So this is basically QT. Also with rate hikes, if you have a look at rate hikes, so here's the Fed funds rate, we've had a pretty big uptick. So this 0.5% uplift in rates was basically the biggest single day move they've done in, I think, 59 years, which is pretty big. And a lot of people are thinking, oh, if you zoom out, Siam, zoom right out, you know, rates are way back here at 20% in the 80s and whatnot. Things have changed a lot since then. And one of the things which is completely different now is that the US has $30.5 trillion of debt, and that's not talking about the unfunded liabilities or the US total debt, which is $91 trillion. It's absolutely bonkers. So if you just did some quick math, so 30.5 trillion, and so let's just write this over here, 30.5 trillion, and we go back to this over here, the Fed funds rate. Let's really zoom in. Come on, zoom in. Right, so they're at 0.08. So basically mid-March rates were 0.08, right? So what is the interest repayments on 0.08% of 30.5 trillion? I'm going to pause the video whilst I try and fumble my way through a calculator. Bear with me.
A few moments later.
Okay, so let's just work this out. So if we just, so that's 305 billion. There we go. So that's 30.5 trillion. So 0.08. So you need to times that by. So that's 1%. That's 0.1%. There we go. That's 0.8 there. So what this means is that at that rate, the US have been paying 24.4 billion. So 24.4. So 24.4 billion per year on just interest repayments. So when we look at the rates these days, right now, and by the way, there's more rate hikes to come. So this is going to get it, 1, 2, 3% over the next year or so. So at 0.83, well, what does that take us? So let's go through this all over again. Let's divide that by 1, 2, 3, 8. That takes us back to there, times 0.0, that's 1%, 0.83. There we go. 253 billion. So this is the ramifications of these rate hikes. It may not seem much, but the debt is so much bigger than it ever was. So the US government are now going to go from $24.5 billion a year in interest repayments to $253 billion per year. That's freaking nuts. And when you look at the US debt clock again, so US debt clock, where the hell has it gone? So obviously you can see GDP that's crashing. The debt is increasing at a freaking ridiculous rate. But when you add it all up, they're earning about 4.2 trillion, but they're spending about 6 trillion. So basically income is 4 trillion, outgoings are 6 trillion, which means their deficit is about $2 trillion a year. And now with these sudden rate hikes, it's now 2.253 trillion. They can't find that. They're already running a deficit. So this is not good for the economy or the US. And the reason I'm focusing on the US is because when the US sneezes, the world catches Ebola. So rate hikes are something to be aware of. And I've already talked about in previous videos about how the credit markets get hit. And that means there's going to be less lending. Yeah, just watch the previous YouTube videos. War, that's going to continue for a long time. Ukraine's not going anywhere. China's ramping up to take out Taiwan, or to take back Taiwan. Rising oil. So if we have a look at oil, wait, how many charts do we have open? Jesus. Here we go. So if we just look at this, oil is rising, and basically every country in the world drinks oil like it's water. So that means every country in the world is going to have to spend a bigger part of their budget for just energy, making food, sending food, all that sort of stuff. Again, I've spoken all about this in the past. This is not good for governments. Every time you see rising oil prices, you tend to see a crash. It's normally the preceding indicator before a big recession. So that's that. And the declining economic energy, we're just there since the COVID lockdowns. The world has not got back to where it was. So what this all means is that there is a massive crash coming along. So I know what does this mean for you in crypto and Bitcoin? Well, a lot of people I see are blind, I think blindly in my opinion. They're getting up the Bitcoin chart and they're going, right, let's get up the Bitcoin. Let's get this one. Let's get it on the weekly chart. Let's get rid of all of these lines. And everyone is going, oh look, Bitcoin, every single time it hits the 200 moving average, it always booms. And yeah, that may have been the case. But back in March 2020, okay, that was actually the only... So that was pretty grim. The whole world was locking down, and yet Bitcoin still rallied big time. Over here, 2018, not much happened. And then there's there's, in fact, if we go on the logs, let's open up the log. Yeah, these are, again, 2015, that was the last time. So August 2015 was the last time we had a big stock market crash. So 2020. So a lot of people are looking at all of this going, oh yeah, every time there's been some sort of stock market crash, Bitcoin has hit the 200 EMA and then absolutely rallied. But again, I don't think this is the case. This time round, there's so many other things that are in this sort of horrible witch's pot, this cauldron of crap. Yeah, that's what it is. It's a cauldron of crap, and it's going to lead to a lot more. And in my life, I'm only small fry when it comes to trading in the markets, but I've had 6, maybe 7 days where I've made more than £100,000 in a single day. And this is just with stocks. With crypto, I've had many more. So when I look at me trading equities, so looking at the S&P 500, the Dow Jones, Nasdaq, FTSE, all that sort of stuff, there's been 6, maybe 7 days where I've had more than 100k wins. I probably think 5 out of 6 of those times, those big wins have always been on a Monday. I normally fill my boots on a Monday. Now, what is the leading thing for that? So the last one, in fact, my biggest ever single day, if you go to therealistictrader.com, go about Siam, 2015, I made 426 grand in a few hours on Black Monday. Now, again, you can see the proof. It just opens up my trading record of that day, etc. And I placed shitloads of trades. But the recipe for the lead up to that day is very similar to what's happening potentially tomorrow. So this video is late on the 12th of June. The 13th of June, as in tomorrow, could be one hell of a trading day. Now here's why. If you go to, let's get the S&P 500, let's just go back to the 24th of August 2015, where I basically had a pretty nice day. Here we go. So actually is the Dow Jones, I think I was, no, S&P, doesn't matter, they all did the same thing. So here we go. So what was happening, the reason it looks a bit weird because it's on the weekly chart. There we go. Let's get back to this. 2020, Jesus, sorry about this. July, yeah. So up until this point, I was calling for a stock market crash around 2015, and I saw this NDV, so non-directional volatility, where basically the market had basically been rallying hard for years and years and years. Then all of a sudden it started having a bit of a breather, and this is what I called NDV, non-directional volatility, where there was huge amounts of volatility, but there's no net directional bias, if that makes sense. And there's a few other bits and bobs. There was a bit of a cauldron of shit back then, but I was looking out for a big stock market crash. And then all of a sudden it got to August and we had a bit of a fake out, and then we saw this. Now I think I missed this particular this is the 20th, okay? So I had obviously drawn some sort of support level around here, and I thought, ooh, okay, are we going to bounce or crash? Then we had the Friday. So the 21st of August 2015 was a Friday, I remember this, and I made a fair bit of profit here. But then this kept on crashing, it kept on falling into the close. Now this is something I always look out for. Whenever a market, like a major index like this, is crashing and it crashes into the Friday night close, guess what happens? Media goes, oh, the stock market has crashed 10% today, or whatever you want, and then dealers and stockbrokers and funds all over the world get flooded with sell orders. And so what happens is that on Monday, when the market opens, you can sometimes get a gap down. And so here, this is the 21st. Look what happened on the 24th, which was the Monday. Boom, the market gapped down tiny bit, but then absolutely shot down. And that single bar there is where I made all my killing, all that money on that single day. So fast forward to now, what's happened? Well, similar outcome. So we've had all sorts of necklines and stuff like that. We've got a potential Kobo here. But what happened yesterday? Well, on Friday, so on the 10th of June, well, actually leading up to that, we had a bit of a sort of double top-ish. We had a market bouncing down, it gapped down massively and didn't stop falling into the closing bell. And so tomorrow, what's going to happen? Now, obviously, this is a regulated asset, so it's illegal for me to tell you what I think is, I'm going to do, etc. But hopefully you can read between the lines a bit. Yeah, every single chart you can see, actually, it looks like pre-trading has started, and the Nasdaq as well. But yeah, it's going to be interesting. Now here's what this means for Bitcoin. If we do see another sort of Black Monday type event happen, and if equities carry on falling, Bitcoin and Ether and every other crypto is going to fall with it. Okay, so what this means is that we're going to see another little fall. Now looking at this on this chart, there's really not much support until sort of 20k. That's the next real thing. Well, I guess if you to zoom in, there's probably a bit of support around 24 and then 20. But really, an easy pattern you could look at it, you could say, right, this is just a bearish rectangle, and the distance from here to here should play out there to there. So if that's what, 37 to 32, let's call it 7k, and 28.5 minus 7k, so yeah, we're looking around this area here. And I've been saying for a while, when Bitcoin gets around sort of the 22k level, that's where I'm going to be gobbling up everything. I've got a big pot just sat there in stable coins doing bugger all at the moment. So if Bitcoin gets around sort of 22k, I'm going to be buying up blue chip, good layer ones basically, and then going long. So yeah, that's my little update. I'm looking forward to tomorrow. Hopefully it's going to be one hell of a day. And also leading into this, I've also got a whole bunch of trades on them at the moment. So if we open up my Bybit, I'm shorting a bunch of shitcoins. Well, I don't think Binance is a shitcoin, but I'm shorting it. The others are definitely shitcoins: ICP, Tron, Waves, GST, Luna 2. That's not budging just yet, but you can see it's running into tonight, tomorrow. I think there's a potential for these to be doing pretty well. Anyway, hope that helps. Chat soon. Bye.